All right, today we're jumping into the latest numbers from USA Rare Earth. That's ticker USAR. And trust me, you're going to want to stick around for this one because it's one of the most interesting market reactions we've seen all season.
So let's get right to it. The headline numbers. USA Rare Earth reported an adjusted loss of 25 cents per share. Now the street, they were only looking for a loss of 10 cents.
You don't need a calculator for that one. That's a 15-cent miss. And look, for a company that's still in its development stage, that is a big miss. No two ways about it.
So you'd think the stock just got absolutely hammered, right? I mean, a pre-revenue company with a miss that wide, you'd be expecting a massive sell-off the next day.
But that is not what happened. Not even close. The stock shot up and closed nearly 10% higher the very next day. So what in the world did the market see that headline number completely missed? That right there is the real story we're going to unpack.
The answer is pretty simple, actually. The market looked straight past that quarterly miss, all the noise, and zoomed in on the long-term strategic story. And that story is all about building a complete mine-to-magnet supply chain, one that is entirely outside of China.
And, you know, the new CEO, Barbara Humpton, she just framed this perfectly on the earnings call. She's not just talking about digging stuff out of the ground. No, she's talking about national security. She's talking about getting rid of a critical point of failure for the entire Western world. This is the kind of big-picture narrative that gets investors to sit up and pay attention.
So what does this mine-to-magnet thing actually look like on a map? Well, it's a four-step plan to control the whole process. Step 1, mining the raw materials down at Round Top, Texas. Step 2, processing them up in Colorado. Step 3, turning them into metals with a company they're buying in the UK. And finally, Step 4, making the actual high-tech magnets in Stillwater, Oklahoma. It's the whole shebang, from start to finish.
The big question, of course, is how are they going to pay for all this? Well, despite the loss, and yeah, some kind of scary going concern language in the SEC filing, the company's balance sheet is a fortress. They are sitting on over $400 million in cash, with basically no debt. That buys them a very long runway to get this plan off the ground.
And get this, they are building this thing in the middle of a perfect storm, in a good way. You've got the U.S. government practically begging companies to bring these supply chains back home. You've got China making moves with export controls, which just adds a ton of urgency. And the Department of Defense is laser focused on this stuff. The whole sector is just riding these massive geopolitical tailwinds.
Okay, so let's shift gears from the big strategy to the actual roadmap. How does this vision turn into real-world milestones that you and I can actually track?
Well, the next 9 months are absolutely packed. First up, they need to close that big acquisition of less common metals by the end of this year. Then, early next year, they're launching a cool recycling pilot program. But the big one, the one everyone's watching, is in the third quarter of 2026. That's when they'll complete the pre-feasibility study for their massive Round Top mine. That study is a huge deal. It'll tell us if the mine is really as good as they think it is. And hey, this isn't all just theory. We're already seeing some early signs that customers are buying in. They've got an agreement with a company called Enduro Pipeline for magnet deliveries starting in early 2026, and another deal with ePropelled for magnets to go into drones and electric vehicles. These are real, tangible signs that the market wants what they're building.
Okay, so we've looked at the earnings miss, the huge strategic vision, the cash, the catalysts. Now let's put it all together. What does this actually mean for the stock? Here's our call.
We are initiating coverage on USA Rare Earth with an outperform rating.
So why outperform? Well, it goes right back to why the market reacted the way it did. They had the cash to get it done. The geopolitical winds are at their back. They have a clear list of catalysts coming up that could pop the stock. And that pending acquisition, it's a brilliant move that seriously de-risks their whole strategy.
So here's the bottom line. For the next several quarters, you can pretty much ignore the earnings per share number. It just doesn't matter. What does matter is news. The stock is going to live and die based on them hitting these strategic milestones. That's what you need to be watching.
And that brings us to our final segment, the trade. This is where we lay out a speculative, but we think very plausible idea based on everything we've just talked about.
We're calling this one the pre-feasibility play.
Here's the basic idea. The play would be to use long-dated call options. The whole thesis is to capture the potential explosion in the stock price from one single event, the results of that Round Top study. So you'd want to look at options that expire after the study is due in Q3 2026. Why?
Because if that study comes back positive, it would be a massive de-risking event for the company's crown jewel asset, and it could cause a major re-rating of the entire stock.
And as always, we have to end with our crucial reminder. This is not financial advice.